All right, let's dive right in. Today we're tackling IGCSE Accounting 0452, and we are zeroing in on the sole trader statement of financial position. But listen, I want to be super clear right from the jump. This is not just your basic run-of-the-mill record-keeping lesson. No way. Think of this as a masterclass in financial intelligence. We're building the exact bridge you need to get from simple data entry up to the high-level analytical skills that secure an A-star in the 2026 syllabus. We are going to break down exactly what the examiners are looking for, so let's get that structural framework built. Okay, let's look at how we're breaking this down today. First up, the core concepts. Then, mastering technical execution. Third, we hit evaluation and AO3 skills. And finally, those top examiner insights.
Section 1. The core concepts. The foundation of financial intelligence.
Imagine a sole trader walking into a bank, right? They're trying to impress the bank manager to secure a massive, critical business loan. The absolute bare minimum expectation is that they actually speak the right language. And for the 2026 syllabus, Cambridge has fully transitioned to modern, international terminology. So terms like irrecoverable debts and owner's equity, they absolutely must be used with 100% accuracy. If you're dropping outdated terms in your exam, you're basically signaling to the examiner and to our imaginary bank manager that you just aren't up to speed with current financial reporting standards. It's a non-negotiable. So the crucial point is this fundamental rule: assets equals liabilities plus equity. It's simple, but it is everything. Because of the duality of every single transaction, any financial movement in a business is going to impact this equation. It must balance out perfectly every single time. It's literally the heartbeat of the statement of financial position.
Moving on to the core principles, we've got the business entity concept and the historical cost principle. But a really massive pitfall, one where students constantly bleed marks, is ignoring the prudence concept. You absolutely must never overstate profits by ignoring potential losses. You just can't do it. On top of that, you need to be totally fluent with key vocabulary. Words like accrued, prepaid, realization, consistency. And my challenge to you is don't just memorize definitions. You need to practice actually applying these complex terms to those tricky, multi-layered business scenarios you're inevitably going to face in paper 2.
Section 2. Mastering technical execution, the procedural flow. Okay, listen up, because this is a massive A-star secret straight from the examiners. They explicitly state that method marks are awarded even if the final balance is totally incorrect, provided your logical flow is visible. Please, never do your calculations solely in your head. Don't hide your steps. Always show your workings, especially when you're wrestling with complex adjustments like depreciation or tricky inventory valuation errors. If you make a tiny math slip-up, but your underlying accounting logic is totally sound, you can still salvage those crucial method marks, but only if the examiner can actually see your procedural flow. The procedural flow is really a journey. It all kicks off with a source document, like an invoice or a bank statement. Then it moves seamlessly into the books of prime entry. From there, it flows right into the T accounts, summarizes in the trial balance, and finally culminates in the final financial statements. And step 3, that T account structure, that is still the absolute gold standard for representing the double entry system. It's where your technical execution really gets put to the test. Now, what's really interesting here is a common technical hurdle that trips up so many people. It's the contrast between balance B/D, brought down, and balance C/D, carried down. Let's say you're closing out a rent account at the end of the month. If you mix up exactly where that balance carries down, you will completely derail your transition into a perfectly accurate trial balance. You'll just be sitting there, staring at unbalanced ledgers. And honestly, that is a universal pain that every single accounting student knows way too well. Here's another major technical trap you need to watch out for: trade discounts versus cash discounts. Okay, let's do a quick pause and attempt practice. Imagine a business offers a 10% trade discount and a 5% cash discount on a $1,000 invoice. Which one do you actually record in the ledger? Just pause and think about it for a second. Got it? The answer is that only the cash discount actually hits the ledger. Calculating these strictly and accurately prevents this whole cascade of errors later on. Oh, and a quick side note: always remember to note your state's symbols super clearly when you're dealing with manufacturing accounts. Section 3. Evaluation and AO3 skills, looking beyond the numbers. I want you to imagine sitting in that exam hall. You've just calculated a current ratio for our sole trader, and you see that it's completely plummeted from 2.5 to 1, all the way down to 1.1 to 1. A baseline average answer is just going to state the math. But an A-star answer, it dives deep into the why.
You see, just generating the numbers is one thing, but interpreting what they actually mean for the survival of the business is exactly what sets the top candidates apart from the rest. To uncover that why, you really have to adopt the mindset of a business evaluator. Start asking the tough questions. Has inventory been overpurchased, which is tying up all their crucial cash? Are trade payables being settled way too slowly? Or maybe cash reserves are completely depleted because of a massive recent capital expenditure. Using these exact analytical questions to figure out what that ratio drop actually means for liquidity and profitability, that is the absolute hallmark of AO3 skills. Now, think about two rival businesses in the same industry. One decides to use straight-line depreciation, and the other goes with reducing balance depreciation. Trying to directly compare their profitability is incredibly difficult. It's like comparing apples and oranges. You are fully expected to look past the surface-level numbers and really analyze the true quality of the profit they're reporting based entirely on those contrasting accounting policies they've chosen to adopt. Furthermore, the highest marks always go to those who remember that numbers just don't exist in a vacuum. Non-financial factors completely drive the return on capital employed, or ROCE. We're talking about real-world things like staff morale, the physical location of the shop, and their overall market reputation. These are absolutely crucial sustainability factors. They aren't captured anywhere in the accounting ledgers, but they dictate the long-term success of the whole shebang. Section 4. Top Examiner Insights, the Exam Strategy Guide. I need you to listen to this direct, emphatic warning straight from the 2024 and 2025 Principal Examiner reports. Quote, students often lose marks through poor handwriting in ledger accounts and the failure to distinguish between revenue and capital items. I know it sounds almost too basic, but please do not let your brilliant accounting logic get totally ruined just because the examiner literally cannot read your numbers. Simple, pristine presentation, along with really strict categorization, are the ultimate safeguards for protecting your final grade. To truly empower you for Paper 2, here is a rapid-fire do's and don'ts checklist for exam day. First, show all of your logical workings to lock in those precious method marks. Second, manage your time effectively. Third, align your effort with the weightage of the question, meaning don't spend 20 minutes agonizing over a tiny 3-mark calculation. And finally, double-check that you are exclusively using that modern 2026 terminology we talked about earlier. Bringing this entire explainer full circle, I want to leave you pondering this thought. Without this specific financial integrity, how can banks, owners, or tax authorities possibly make truly transparent decisions? The principles you're studying right now, they aren't just arbitrary exam hurdles. They are the bedrock of global financial trust. When you master the statement of financial position, you aren't just passing a test, you are literally learning the language of global business. Keep practicing, keep those T accounts perfectly balanced, and thank you so much for joining me for this masterclass.